What is the outlook for the restaurant industry based on the annual ICR conference this week? Hello, and welcome to The Week in Restaurants, a look at the biggest stories of the week in the restaurant industry. I'm Lisa Jennings, Executive Editor of Restaurant Business, and I'm here today with Senior Editor Joe Guszkowski. Joe is fresh off the plane from sunny Orlando, where he listened to a whirlwind of mostly public restaurant companies talk about their brands and what's ahead. In addition, this week, Dutch Bros is in acquisition mode, and restaurants in Minnesota push back against the ICE crackdown there. Later on Tech Check, Joe will talk about delivery costs. But first, Joe, we want to hear from you. You're just back from the ICR conference, which is a huge gathering of public companies making a parade of presentations to Wall Street analysts, investors, and others who follow the industry. Tell us about what you heard, who you spoke to, and what the mood was this year looking into 2026.
Yeah. So you can see my tan. I'm clearly just got back from Orlando. So the first thing I'd say about ICR this year is that there were a lot fewer restaurants than in past years. You know, some notable names that usually present, like Denny's and Cracker Barrel, did not do public presentations, which maybe isn't that surprising given the year that we just had in the restaurant industry. Nonetheless, there's still plenty of people to talk to there, and pretty much everyone I talk to, I ask, what's your outlook on the year? What's your vibe? And I'd say generally the sense is that a lot of the stuff that was going on last year with the consumer and with the economy, people think that's going to continue. But maybe restaurants are a little more prepared for it. And some of the things that they did last year that were successful, like value, really working on your operations and your experience in your restaurants, will help combat some of that stuff in 2026. And maybe the consumer starts feeling a little better. Some people mentioned the possibility of bigger tax returns. Gas prices are down, things like that. So I don't want to say cautious optimism, because I think people are very realistic about the challenges ahead. But I think restaurants learned some things last year, and they're not going to be taken by surprise as much in 2026. Some other highlights from the event, probably the most anticipated presentation was from Fat Brands, which is going through, some financial issues, a potential bankruptcy. Not a lot of news came out of that presentation. It was a bunch of kind of softball questions, and at the end, CEO Andy Wiederhorn kind of said they're trying to resolve these issues without going to court. It's a complicated financial setup. There's a lot of lenders involved, and they're trying to work it out, but that might not be possible. And he said it's been a painful and slow process. Some of the most interesting brands were the private companies. Qdoba gave a great presentation, a really kind of rousing presentation from their CEO, John Sawinski. And they're really going after Chipotle, as you've written about, Lisa, and Nothing Bundt Cakes also had an interesting presentation, a lot of kind of curiosity in that brand. They sell bundt cakes, and that's it, and they're growing like crazy. So yeah, that was ICR, and it was a good event, and we'll see if the predictions end up playing out this year. But what did I miss while I was gone, Lisa?
Well, hold on. Before we leave ICR, I did want to mention one of the stories that you wrote that I thought was super interesting was about Firebirds, which was a casual dining brand that seems to have really found a sweet spot. And where we've been talking endlessly about the perception of value, but here is yet another casual dining company that really has managed to kind of capture an audience, or is growing their brand based on offering an affordable price point. Basically better burgers. People are trading up from fast casual and trading down from fine dining, and they're finding something there that they can afford. So tell me a little bit more about Firebirds and what they're doing.
Yeah, I'm glad you brought that up. That was another private company that impressed me. Yeah, Firebirds is a American grill. They use real wood-fired grills in the restaurants, and they have this very interesting positioning, which is slightly above casual dining, more upscale, but the price point is much lower than what you'd get at fine dining. And they're very welcoming to families, which a lot of polished casual chains, I would say, are not necessarily thought of as a place you take the kids, but they have a kids menu that's won awards, and they do a lot with the kids. And this has been, perhaps not surprisingly, really popular. People are, like you said, they see it as a better value than maybe another more traditional casual dining chain, because you're paying similar price, a little bit more, but the food and the experience are much better. So I think that's something we've been hearing this year, is that value is not just about price. It's the overall experience and what you get for what you pay. And Firebirds seems to be kind of the perfect example of that. So they're growing and looking to open more locations. I think they have about 70 right now.
Yeah, yeah, interesting. It's definitely one to watch, just in terms of, for those who are looking for who's finding that right combination of, in presenting value. That's a brand to keep watching,
Yeah.
looking at. Well, and Dutch Bros was there but didn't present, right? So Dutch Bros is another company that was in the news this week because they acquired a 20-unit chain, Clutch Coffee Bar. Dutch bought Clutch this week, or at least agreed to, and this is going to give them a little bit more of a hold on the Carolinas, because Clutch was it operates there in North and South Carolina. And I think Dutch Bros only had one unit in each of those states, but now, with these 20, they'll be converted to Dutch Bros. So that's really going to give them a big jump in there. Of course, Dutch Bros has plans. They want to hit 2,029 restaurants by 2029. Very easy to remember that goal. And so they're going to be on a pretty aggressive growth tear. And I think that we're going to be seeing some more consolidation in these. There's just hundreds of small regional coffee chains out there now that have been growing, trying to get a hold on this whole coffee trend. It's really more of a larger beverage trend. It's not just coffee. And I feel like there's going to be consolidation with companies like Dutch Bros that are very financially, sound and showing great results. We're going to start seeing, I think, these kind of companies picking up some of these smaller regional chains and being able to grow that way. What do you think about that, Joe?
Yeah, I think that seems likely, especially given the fact that a lot of these are the drive-through concepts, and that real estate seems to be at more of a premium. Like, it's harder to find a place to put a Dutch Bros, I would think, because of the permitting issues and things that go along with drive-throughs. So I think you're right, and obviously there's a lot of demand for these concepts, so it makes sense. In this case, Dutch buying Clutch, like you mentioned, they only have to change like 2 letters on the sign, so that'll help too.
Definitely. Yeah.
I was on the plane to ICR. The people sitting next to me, as soon as we landed in Orlando, started looking for Dutch Bros like near them. So they're really popular.
Yeah. Yeah. I mean, it's just amazing how that, it's really much more about coffee, much more than coffee. I mean, it's what Dutch Bros has done is kind of they've created a whole vibe that is about service, but still through a drive-through window. I mean, they've really kind of created an experience that I think people are really responding to. So again, it's really a brand to watch. I mean, there are other growing, Seven Brews, other growing coffee companies out there that are gaining scale, and I think we'll also be looking at acquisitions, and so we'll maybe be seeing some more, a consolidation movement in the coffee world, which will be interesting, or beverage world, as this progresses. So
Well, in less exciting news, Lisa, you wrote about how restaurants in Minneapolis are dealing with this um, terrible situation there, and the ICE roundups. Tell us a little bit about that.
yeah, of course, the national news last week, there was a shooting death in Minneapolis. An ICE agent shot a woman who was there, a U.S. citizen who was there, as an observer. That's a whole issue, but it really, the response in Minneapolis, in St. Paul, in Minnesota in general, from the restaurant industry has been, I think, a little bit different from what we've seen from the other cities. I mean, this is just the latest move of or crackdown, I guess, that has already hit Los Angeles, where I am, Chicago, Washington, D.C., Memphis, some other cities. I feel like the response here has been a little bit stronger in terms of pushing back, on this effort, because it has impacted the restaurant industry so specifically. We're seeing restaurants shuttering this week because they're concerned about their guests and their workers. We've seen fundraisers to try to, collect goods and food and things for people, because so many people are staying home or afraid to go out because of what's going on in the streets. There have been very aggressive protests. I think there was another shooting there this morning, not at death, hopefully. But it's interesting to see that the restaurant industry, and I know there has been pushback in other cities. It's not like Minnesota's the first to do that, but I just feel like people are feeling like they can be more vocal about it, maybe, because in the past, I know when I've talked to people about the impact on the industry, a lot of restaurant operators were afraid really to talk about it because they thought that there would be they thought that people would target their restaurant if they, kind of spoke out against what was happening. So it is interesting, and I do admire the people in Minnesota for at least trying to take a stand. I think one way or the other, and I think, for the most part, they're standing up for their community, and I know it's been really difficult for the folks there. So, and this is definitely going to impact their sales as well. I mean, I think we're going to be talking in a few weeks about the impact that this crackdown has had on businesses overall in Minnesota. Joe, I know you lived in Chicago, but now you're in Wisconsin, and it hasn't really hit Wisconsin yet, right? That's not.
No, we haven't seen anything on this level. And it seems like Minneapolis is the largest effort so far by ICE. Is that right?
Well, I don't know if can say the largest, because, people are still being arrested here in LA. I mean, we still are constantly in the news every week. There's another raid somewhere and then people being arrested. So this is still going on. It's just become, it's been months now. So it's become kind of just something that people just have adjusted to, which is kind of a horrible thing to say. But I know there are lots of folks that still are not, they're trying to avoid going out, friends who are going to Costco for other friends because those friends don't feel comfortable. They don't feel safe, going out shopping and that sort of thing. So it's just become the way of life here, which is really sort of sad. But, the effort will continue. And I know there are people out there who celebrate this and think it's a great thing. So, but I do think fundamentally this is going to have an impact on businesses, both from a sales perspective and, from a staffing perspective. So 2026 is going to be another year of chaos in that regard.
Yeah.
So.
Yeah. And just a question of how do you choose to respond, if at all, the restaurants you wrote about, obviously you have chosen to speak out, but that may not be an easy decision for like a national chain to decide what to do in a situation like this. So, just another bit of uncertainty in a year of lots of questions without any easy answers.
Indeed, yes. Well, and sorry to leave it on a sad note, but we are going to hear, I think, in a moment after a commercial break from Spoons, we are going to hear from you, Joe, and we're going to hear a little bit more about delivery with the Tech Check report. So stay tuned.
Keep up with what's happening in the restaurant industry with Restaurant Daily.
I'm NRN Managing Editor Leanne Zinsmeister.
I'm RB Managing Editor Heather Lally.
We bring you a specific look of what's happening in the restaurant world from brands like McDonald's, single unit mom and pop shops, and hot button issues like inflation, tariffs, and more.
Start your day right with the Restaurant Daily podcast every weekday on Apple Podcasts, Spotify, YouTube, or wherever you get your podcasts.
And be sure to subscribe to never miss an episode.
Hello and welcome to Tech Check, where I, Joe Guszkowski, talk really fast about one big topic in restaurant tech. This week, is this the solution to high delivery costs? I spoke with a small company called Delivery Collective that has an interesting plan for an alternative to the big delivery apps. The first problem that the company hopes to tackle is the cost of building and maintaining a big selection of restaurants. Its solution is to partner directly with big POS providers that work with lots of restaurants to quickly build a marketplace at a low cost and pass the savings to restaurants and customers. The next issue, of course, is how to get customers to use this marketplace rather than the existing ones everyone knows. For that, Delivery Collective is betting on ChatGPT. It has built an app for the AI chatbot that will allow customers to order directly from its restaurants at a lower cost than regular apps. A lot will have to happen for this plan to work. A lot of POS providers will have to opt in, and a lot of people will have to start using chatbots rather than apps to order. Even assuming both those things happen, there's no guarantee you'll be able to pry people away from the major apps. Still, I like the creativity, and I hope to see more companies looking to tackle some of these issues with delivery.
And thank you for joining us for This Week in Restaurants. Please listen wherever you get your podcasts. And I hope you have a terrific week. See you next week.